You learn about technical analysis. You learn more about technical analysis. You make some trades that work and many that don't. Your results are not consistent. Worse, you're not sure why the ones that work do. You think, how am I going to grow my trading account if I don't know why the ones that work do and the ones that lose money don't? Well, in this video, we teach you a technical analysis trade, the break and retest trade that works, and more importantly, why. Hi, I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account. Okay, I'm here with a senior intern from our desk, and we're going to judge one of his playbook trades. We will score him on 10 criteria and give him a score to see if he's meeting the standard expected by us. His playbook is titled the break and retest trade, and we will break this down in step-by-step detail. I hope this gives you a clear example of how a professional trader thinks through a trade and what's necessary for you to make a good risk-reward trade with edge. Okay, let's meet SME intern Carter, see if he passes the test in the hot seat. He's going to need to score 85 or better and get into his technical trade.
So I'm Carter, and this is my break and retest playbook on Wolf from July 6, 2023.
So Carter, tell us about where you're at in your trading career and something interesting about yourself.
Yeah, so I just graduated college this past spring. For my trading career, I've been trading.
It's all downhill from here.
Yeah, for real.
For all of us who have gone to college.
Yeah, so I've been trading for, seriously, I'd say 2 to 3 years now. Finishing up my senior internship and then hope to have a long trading career hereafter.
Okay, so you've done a junior internship.
Yep.
You did that last summer.
Correct.
This is your senior internship?
Yes.
Okay. And anything interesting about yourself?
Nothing too special.
How'd you get here?
Well, honestly, I think it was from winning 2 national championships. Carthage College, D3 men's volleyball. We were able to pull up back-to-back national championships, so that was pretty cool. So I think being an athlete and you guys seeing that work ethic was pretty important. All
right, great. Let's go over the trade.
The big picture for SPY, Wolf Speed is in the S&P 400, which tracks mid-cap companies. So SPY was the appropriate index for me to take a closer look at. We recently tested the 52-week highs and failed. And on the day of this trade, we were gapping down. The overall VIX environment is 15.2 to 17. That was the range on the day. So the money is made in the individual catalysts, and that's why I focused on Wolf. You always want to be aware of the nearest important technical levels. So the closest resistance was 444. That was very significant on SPY, which is where we failed at. And then support is at 430. So pretty much in that range. Zooming in a little bit, 5-minute chart and the hourly, you're just able to see a little bit more clear of how we failed at that 444 level.
All right, so we're very strong, but we're gapping down on an individual day.
Mm-hmm. Yeah, for the big picture, I think something to note as well, with this catalyst, it traded independently of the market. So as much as it is good to go through the bigger picture and have it up while I was trading, if there was no major moves in the indexes, it didn't really affect Wolf itself. So for the intraday fundamentals, the catalyst itself was the company signing a 10-year, $2 billion deal with Renesas for semiconductor-related technology. You can see the picture they have up there. Their technology is really this carbide or silicon carbide. Not really sure what that is, but it's important for semiconductors. So regardless, the deal was 28.3% of their market cap at the time, and we ranked this an 8.5 in the AM meeting. So we were all very long bias, and that's kind of how we game plan for the day. But ultimately, we ended up getting a failed move up, failed breakout over 67, and that leads into a check in favor for the shorts. So it's important to, as much as you can have this bias for the catalyst, focus on the price action because price action is king. So that was important for this trade. We had an extreme gap up 17% with we had a lot of emails from our analysts, but looking back, they weren't too excited about it. For something being almost 30% of a company's market cap, I would have thought the analysts would have been a little more excited about that. But yeah, so for the intraday fundamentals, average volume just over 3 million.
Has the stock just traded up pretty strongly before this announcement?
No. So that's actually, they're one of the laggards in the hottest sector, or one of the hottest sectors, the semi space. Obviously, you have AMD, NVIDIA, all of those stocks, and that was important to note. I'll show you on the next slide the daily chart. But these
that strikes me as a 9 out of 10.
Yeah.
I know you guys graded an 8.5 out of 10.
Yep.
In terms of catalyst. So just to explain to people outside of SMB, so we want to look for a stock that has a catalyst, either a news catalyst or a technical catalyst for us to trade. We want to then judge or score the catalyst from 1 to 10. And so you guys scored it an 8.5 out of 10. I would score this a 9 based on what you just said. It's in a hot sector. That's a big deal. It's a big percentage of their market cap. I would have given that a 9 out of 10. And so that's the first thing is, does it have a catalyst? Second thing is, we want to score the catalyst. We want to be trading catalysts that are 8 out of 10 or better. That gets us interested in a trade. And so that's meeting a couple of those criteria right there. So far, so good.
Cool. And then I think I'll get into that, but the technical level as well was a 10 out of 10 for me. So definitely in play. Just over 3 million average volume. This is on the lower end for me and a lot of my scanners, but we did elevated RVOL just under 6 on day 1 and then 1.7 on day 2. So liquidity.
So we want to just, when we're thinking about whether we want to trade something, does it have a catalyst, news or technical? Is the catalyst 8 out of 10 or better? And then this third thing is all this information is really a fancy way of saying, is it liquid? Yeah. The way that we think about liquidity is, does it do over 1 million shares in volume? That's a good way to check. Is the average daily volume over 1 million? And then you want to ask yourself, when I'm trading this, can I get it at good prices? Can I sell it at good prices? Can I get the amount that I want? That's how we're thinking through something as liquid. And then the other thing is, does it have range? So does it have an ATR of at least 1? And do we expect it on this day to at least do twice its ATR? So is something going to move at least 2 points intraday is how we're thinking about range. So those are 4 criteria. There's another, but that's why we're talking about this.
Mm-hmm. Yeah, and then noting the spread too.
So the ATR is 2.57, and it's going to do probably 2 to 3 times on a particular day.
Yep. Yeah.
With an announcement like this.
Yeah.
So you're going to get the range. Is it going to be liquid enough?
Mm-hmm. So the spread was, when it would widen up, it would get to a little over 10 cents. I think 14, maybe 15 was the highest end, but definitely tradable. And most importantly, like you said, I'm able to get in and get out at the prices I want and manage my risk. The short float, 14. Over 10 catches my attention, but isn't going to affect any of my decisions. If we get over 20, that's when it would change possibly how I would trade the stock.
It might get too illiquid. If the short interest is over 30%, it might be too illiquid. The prices, it may be too hard to control your risk.
Exactly.
Okay.
Yeah. So yeah, they're definitely one of the laggards in the semiconductor space. Getting into the technical analysis for Wolf on the daily, you can see we had a 17% gap right into the 200 EMA, which was also respected twice. You can see with those arrows previously at the end of last year and beginning of this year. And we've also noticed a pattern of outsized gaps up being sold. So that's something to keep in the back of your mind. And then we're right into the 67 level. I graded this a 10. You can see 3 clear bounces with fast price action away from that level. and then once you break it, you get one test, and you immediately move from 67 to 39, very fast. So what are your thoughts on that grade for the technical level?
I think it's important. I don't know if it's a 10, but it's better than 8 out of 10 or above. Are you teeing this stock up because of the overall longer term charts, or are we teeing this up mostly because of the contract?
So that was the thing. We were looking at this of a possible breakout above 67, and anyone that's short is now forced to cover. So that was the game plan. But then on day 2, as much as we talk about the catalyst, day 2, you're really just focused on what happened day 1, that price action. So that doesn't matter as much for this trade that I took. But it was a combination of both the level and the catalyst that brought my attention.
Yeah.
And then we are also gapping 3 ATRs outside of the daily B band. I thought this was pretty significant, as we haven't really done that at all in this stock before. Zooming into the 1 hour and the 2 minute.
I think that was at least a 9 out of 10.
Yeah.
I'll say that.
Mm-hmm. The 1 hour just shows how significant the volume was on day 1. And then day 2, it definitely died off, but it was still in play, and we were doing just under 2 R vol. The setup here was you get your gap up. We were looking for the breakout over 67.
So you're trading this the second day. You're not trading it the first day.
I did trade it the first day, but then I didn't trade it exactly how I'd like to. And then I learned from that and was able to trade it really well on day 2.
The trade you're presenting is a day 2 trade.
Correct. Yep. And it's based off of the 61 level, which you can see. And I had a lot of information from watching this day 1 and how we traded and retested that 67 level. So zooming in more to the intraday chart on the 1 minute, I knew that from day 1, this stock really respected its levels. And that's huge edge when you can see that from day 1 and bring that into day 2. The whole day after the first move up, we're trending below VWAP very aggressively, continuously putting in lower highs. So this is a weak stock, and I want to find a way to get short. Kind of walking through the chart, you get the first move up, the failure, actually a very similar pattern to day 1. And then you flush through VWAP on volume, you try to reclaim and get stuffed. And then you get 2 attempts to retest 61 before breaking down and then trending lower for the rest of the day and closing at lows.
So this chart right here, this chart is day 1 or day 2?
This is day 2.
So when you were looking at day 1,
Yeah, I can go back to
61 was...
This was a level on the daily, and then pre-market we were holding up a little bit as well.
So day 1, it doesn't get above 67 and closes at 61?
No, closed above 61.
I'm sorry, day 1 it couldn't get above 67,
Mhm.
and then it couldn't get below 61.
Yes.
Well, at 4 o'clock it
We
closes.
closed at what, 63 probably?
Yeah,
Right around there?
and so you're saying in the aftermarkets,
Mhm.
or I guess in the pre-market the next day, 61 is the low.
Yeah, and realistically, I didn't have 61 marked off. It was marked for the daily chart, but I didn't really focus on it that much until we got the intraday level and how clear that was off the open.
When you say the daily chart, 61 is an important level in the daily chart?
Yeah, you can see we bounced.
Okay, I see.
We held pretty significantly and then rejected there once we broke through. Not nearly as important as the 67.
In March, you're saying in March,
Yeah.
and then in April,
Mhm.
towards the end of May, 61 is kind of your level.
Yep.
Wow, it goes all the way down to 40. Okay, so 67 is the area where it broke down from and started the downtrend to
Mhm.
40 on our daily charts. And 61 was the level where it consolidated for a bit of time from March, almost all of March.
Yep.
And then when it gets below there, that's when it makes its second leg down.
Mhm.
Yeah, that 61 is a pretty interesting level
Yeah.
on the daily.
And I know Steve had this as well. His R1 was 62 on the day and S1 was 60, so that was right at the inflection point.
Yeah, I see what you're saying, that the stock respects levels.
Mm-hmm.
All right, so let's go to the day where we're making this trade.
Yeah, so we really get two very clean bounces, and I like that this was the open price as well. That usually plays a little bit of significance. And then we break through on volume, we retest it twice, and then really aggressively flush lower.
All right, so you're saying, so that's 61 level right there.
Mm-hmm.
I see 1, 2, 3 bounces off of that 61.
Yep.
What time of the day is that?
Just after 10 o'clock.
All right, so we are open, and for the first 30 minutes, 3 times it can't trade below there.
Yep.
And then what you're saying is when you look at your daily chart, 61's a big level as well.
Mm-hmm.
Okay. Are you putting those two levels together? You're saying this is an 8 out of 10 on my intraday. This is an 8 out of 10 on my longer term.
Yep. Yeah, I even had for the intraday importance, and you could see it on the tape. Just from the first few times we bounced, I put this as a 9, but on the daily only an 8. So
okay.
Still worth keeping an eye on. For this trade strategy, this is the break and retest, and to keep it simple, it's a way to get involved in a trend. And you can see how cleanly this trended after the failed breakout on day 1. We had 2 days of just trending lower. So step 1 is identify the clear trend and clear levels to trade off of. So I identified the trend and then the 67 and 61. Step 2 is you want to wait for that key level to be broken. So I waited for 61 to be broken, and that can be a totally separate trade as that original breakdown. But this trade alone, I want to see it be broke, that level get broken on fast move, or on a fast move, and then also a volume, which confirms the importance of that level. And then for the retracement back to that level, you want to see lower volume and then also a fast move up where the sellers still maintain control. But pretty much it shows it's an unsustainable move back into that level. Step 3 is the turn. This is where I'm zeroed in on the tape. And there's a lot of ways that you can see this happen. You can see the offer lift above that level, but the bids just will not step up. And then the offer has to meet the bid. That's one way I look for, but there's a few. You could just get a held offer at that level. So a few different ways there. And then visually on the chart, you can see like a stuff candle at that level or the trend line from the retracement, that being broken. Step 4 is your stop placement. So depending on what entry you use, there's different ways you want to execute that to get involved. But for the stop, ultimately you're going to be 2 cents right above that turn high. And then the break and retest really happens on all time frames. There's times where I use this as a tape trade. You can use it as a momentum scalp, a move-to-move trade, or a trend trade, or a higher time frame swing trade. So really any time frame this happens. And then my reasons to sell are taking 10% off of new extensions, which is based on my discretion, but I must hold at least a 50% core until my final reasons to sell, which are usually a break of a trend line, break of high or lower highs. And then I do have a target in mind, usually with ATR, but ultimately being a trend trade, I don't want to cut this trade short if it's just working. So I'm going to ride the trend until it tells me it's over.
Okay.
And obviously,
I think this is really specific in terms of a trade strategy. I think it's straightforward. I think it's a trade strategy that works. The key is obviously volume is high and elevated when it breaks the level, and key is and volume is light when it's retracing.
Yep.
But you're very specific here. If I were to grade you, which I am grading you right now, on your trade strategy, I think that's a 10 out of 10 on a trade strategy. It's straightforward. It's very detailed. It's very specific. Mm-hmm. You know when you're getting in. You know when you're getting out.
And I think getting that confirmed by a senior trader as well. I've talked to a couple of the more senior guys on the desk, and to get their feedback on the strategy and the execution for this, That gives me all the confidence in the world for when I see this trade to put risk on.
Yeah. Did you get a chance to talk to anyone about this trade on the desk?
Yep, both Justin Spiro and Caleb Phoebus. Those have been the two I've talked to. So thankful to reach out to those guys and get all their feedback and their experience.
Was that after day one?
That was. I'll talk about that later, that transition from day one to day two as well. So getting into the trade management.
Well, I'll wait for that.
Yeah. For the execution, my entry, I knew 61 was a key level, and you could see it on the tape. I'm offering up into that level. You could see it would spray up, kind of consolidate, spray up, and you want that last attempted spray, and then you can just feel the stuff on the tape, and then it just aggressively moves away from that price. So I was able to get filled at 60.97, which I thought was really good prices. And I know fighting for price is what you need to do as a professional trader. And then my stop was right over that turn high. So I was also able to...
What stands out to me is when that level was broken at 61, that when it retraces to 61, it doesn't play any games and trade above 61.
Yep.
I just think when you go back and you look at your charts for the stocks that trended really cleanly, I think you're going to find a lot of times they don't play those games. That I think you used an interesting term where you said the stock respects levels. When a stock tends to finish near a low of day, it tends to respect technical levels. So it gets below a level. When it retraces, it doesn't really trade above that level. It makes a new low. When it retraces, it doesn't retrace that much. Then it makes a new low. Then it makes a lower high. Then it makes a new low. It's clean, and so that often is preceded by, wow. I mean, like how many times do we trade a stock? We say 61's a level. It gets below 61, and then it comes back to 61. It goes to 61.16, and it gets below the level, and then it goes to like 61.21. And then 2 hours later, you're like, oh, stock's $58. Stock's $57. Like, how many times do you say that? But that, and when you're with the best stocks, tend to sort of they're cleaner, and so I just find that always to be interesting. That like, why didn't it go up to 61.06 or 61.11? It's like when it doesn't do that, it means there's a big seller there. It means the seller can't risk trying to sell the thing above 61, and a lot of times it means they've got a lot to sell into close, or else they would try and sell it a little bit higher. That's what that means when a level that gets broken and can't be, when it's retraced, it doesn't get above there again. That's what that means. It means there's a big seller. They're kind of TWAPing out of it. They've got a passive sell algorithm out of this thing, and it's still on. All right.
And then I do add, this was one of the big changes after not trading this great day one. I was able to add size as a momentum lot after the second retest, and then cover that into 60, which was a key level on that extension, and ultimately scale out 10% at a time into extensions. And then you can see in that trend line after noon, we try to break below 59, which is also a key level. Same thing, held that very clean, took 10% off, and we couldn't hold below that. And then my ultimate sell, or my final sell, was the 60% of my core I had left on the break of the trend line.
Yeah, if you just go back to that chart, I mean, look how clean it is. It just doesn't really want to break the trend line.
Mm-hmm. Yeah, and like you said, there's different stocks. When you trade like a mega cap, what I'm actually waiting for is like a spray, like you said, above that level, and then wait for that to get stuffed before I enter. And this was just really interesting because you couldn't even get above that level.
Yeah. What was the stock we were trading today where Carvana?
Yep.
It was like, that was not clean.
Yeah, not at all.
That was not clean. This is really clean. And when you see something really clean like that, you go back and look at your charts, you want to make note of, hey, it's not getting above this really important technical level. I need to be a little bit more aggressive because it's not doing that.
So for reading the tape, there's a couple keys. One, you have to read the tape at important levels. If you use it in the wrong spots, it's just noise. And that I thought was very significant. 61 is obviously a key level, so check there. Low volume on the pullback, and you want the fast move as well, which shows it's unsustainable. And then you almost want like a systematic pullback as well, where the sellers are letting it go higher, but they're also in control the whole time. And then the final attempt spray. Ideally, I wanted this over 61, but they just wouldn't let 61 lift. And that would have given me even more of a clear stop, 2 cents above the high of that wick. And then the speed of the tape, an aggressive move away from price after the turn. And ultimately, being able to read the tape and fight for price allowed me to get 16.5 R off of my core position here.
16.5 R.
Yeah, that's in my trade review about
On
getting
the one
more
trade?
size. What?
On this one trade?
Just from the core position, yeah.
Wow.
Because I only had to risk, I think, 8 cents it was.
That's a good month.
Yeah. So basically, we got the flush through 61. At this point, we're kind of grinding higher. It was fast originally.
So this is in our platform, right? This is Trading Sim?
Correct. I was not able to record this screen.
So sometimes we go back and we use Trading Sim to replay the exact scenario if for whatever reason we haven't recorded it on our screens. And so we're doing that here. This is not our platform. It's not a platform. It's Trading Sim.
Yep.
All right.
So you can see the offers at 60.98, 61 there, but we don't lift that. I think there's one time where we get right above 61, but we never have any prints at 61 or above it. And that's where you get that immediate stuff right after. Okay. So I was offering up into 61 on those sprays up. That's how I was able to get really good prices at 60.97.
Okay. Those are good prices.
Yeah. And then I think this is where you get the last attempt higher, and then you'll see how fast we move away.
Where were you going to cover it above 61?
I gave it a little bit of flexion, 5 cents. I had a hard stop in after I got filled. Based on this price, I thought that was reasonable.
Do you remember where VWAP was at the time?
Where was it? No, it was too high where like I wouldn't be willing to give this that much risk.
You're swing trading this?
Intraday swing.
I think you got to give that a bigger stop.
Okay.
It looks to me, and I'm a little bit blind, but it looks to me like 26 cents is the swing stop, maybe 36 cents.
Like above the high of that big red candle right before the breakdown. So after that first turn, we get
for the swing, because you're basically saying, hey, I think I'm going to capture a pretty good trend here intraday.
Mm-hmm.
And 61's a big level. I think it's 26 or 36. I wasn't trading it, but okay. I think you can give that a bigger stop. If you're momentum trading it, you would keep it that tight.
Mm-hmm.
If you're scalping it, you'd keep it that tight.
Yeah.
You're going to swing it if you say, look, I've seen enough below 61.
Mm-hmm.
I think this is going to trend down.
Yep.
It's came back to 61. I'm going to put a trade to hold on here now. I think I see the turn. I think 26 cents is probably the stop there. Mm-hmm. And then you sort of see if it goes. For a scalp, maybe it would be 6 cents. Maybe it'd be 11 cents for a scalp.
Okay. So right there, we got that spray up into 61 again. You can see sellers.
Because you're not wrong. I mean, if the stock goes to, you're not wrong until it's above the consolidation before it broke down.
Yep.
So I think that consolidation, if I'm reading that right, is 25 cents.
Yeah.
That's where you're wrong.
Okay.
On a swing trade, where am I wrong?
Mm-hmm.
You're not wrong at 61.06.
Yeah.
That could just be like a flick.
Mm-hmm.
You're wrong above 36 cents. You're wrong above 26 cents. You're wrong above 51 cents. Again, it depends on the stock and the consolidation and how much you expect out of it. But that's for a swing, you want to put the real stop on.
Mm-hmm. I like that. So basically, we get that second spray up, and now the important thing to watch is how fast we move away from 61. You probably don't need to watch much longer, but
Okay, good. Then let's not.
and then,
You're busy.
yeah.
I'm busy. No, and I think that's a good use of reading the tape. I say this a lot, which is we teach reading the tape to help you to learn how to scalp at the beginning of your trading. I do not say that everyone should be a scalper, and I do not say that everyone should be a momentum trader. Even if you become a swing trader, reading the tape skills help you, and that's a good example of how it does, because you can use your reading the tape skills to see the swing trade, to get you the confirmation that you should put the swing trade on. You can use your reading the tape skills to enter for the swing trade. You can use your reading the tape skills to trade around your position for your swing trade. You can use your reading the tape skills to set the right stop for that stock. So it's not just that we develop reading the tape skills to be scalpers and momentum traders. We make, and lots of guys on the desk graduate to being swing traders and still really use their reading the tape skills, their scalping skills for entries and exits and adding and sizing and precision, which means their risk reward is better on every trade.
All right, so for technology, I want to give a shout out to Dan D on the desk. His Thinkorswim script was a huge help for this trade. It basically tracks the gap percentage of historical data for the stock and then where we've closed after each gap. So for this trade, we had 2 instances over 15%, and that was a 50-50 shot of closing red or green the following day. But for anything over 5% for the gap, we had a 67% probability of closing red. So it wasn't a lot of data where it was like, okay, I'm going to be really aggressive, but it's definitely something worth noting. And then also what was important was the expected move that the scanner gives you, which was 7% for both day 1 and 2, and it was spot on. Day 1 was 7%, day 2 was 6% from the open.
That is interesting.
Yeah. And then other technology, Steve's AM game plan, which I was able to pull levels from, and also just have the confirmation that this was really in play. Our analyst emails, our inbox was flooded with analyst emails about this. So obviously it was an important catalyst in play. It was on our scanner and radar, our proprietary scanners and radars.
Good use of using the analyst emails in the inbox. Good.
Yeah, and then my personal ones as well. And I think the most important, one of the most important pieces of technology is just simple alerts. So I was able, after we broke 61, to just fan alerts back up to that level because I don't want to miss my best trades. And that brings me to the second slide of technology. It's awesome how at SMB we're able to share technology, and everyone's so willing to, you talk with them and you give and share. But I don't want to just give. I think giving back on the technology side is really important. And as much as alerts are very simple, I think being able to automate that, and instead of just manually setting alerts, whether it's on Thinkorswim or our platform, it takes a while to set 4 or 5 individual alerts. So I automated it where you can take the last price and the price you want. So the level would have been 61. Put in 61, and then it automatically fans alerts from the current price back into that level. So speeds up a lot, way more efficient, very simple, but I think it can be very effective. And there's the code for that, and I'm working to get this approved right now.
All right, good. Awesome.
For the trade review, I think the main thing
Yeah,
is...
I mean, there's 2 things you said there. So I've said this a bunch of times, which is I believe, and I don't say this because I run a proprietary trading firm, but I do say this based on my experience. And I don't mean this is the only way people can be successful at trading, but it really is so much easier when you have people who you can go talk to, like you talk to your senior traders about, hey, how did I kind of mess up on day 1 and reset and learn and then do better on day 2, which you were able to participate in. That's a huge advantage. And then the other idea which sort of stands out is the ability to go talk to another person similar in experienced to you, maybe a little bit more experienced, and to be able to get some technology that he's built out for yourself is a huge win. And so those are two instances where you can work with other people who help you. This is a very difficult game as it is. It's like really hard to be a trader, and you want to put yourself in the best position to succeed. And to be able to lean on the talents of other people puts you in a much better position to succeed. And I know I'm going to get a bunch of nasty email from retail traders telling me we don't need no stinking proprietary trading firm. We don't need other people to help us out. That just hasn't been my experience. And we both have athletic backgrounds. Like, I don't think either of us would have done as well as we would have if it was only based on our efforts. I mean, you get a lot of help along the way. I don't know that anyone really does anything great these days. I think there's very few people that do anything great these days without the help of other people and looking for help. And I think you did actually a good job of reaching out and making connections and collaborating and looking for help. So, and independent traders, they don't have to join a proprietary trading firm to work with other people. You can build your own pods and you can build your own teams at home. I just strongly advise people to work with other people. Today on our desk, we had one of our guys, not the best trader on our desk by any means, call out the Apple breaking news trade. I heard him call out the Apple breaking news trade. I saw somebody else sitting 2 seats to his right make $40,000 on a call that the guy 2 seats to his left called out that he never would have been able to see himself. And, so they and then the other guy who's not as good, who made the call out, got to lean on the guy who is much better and made 40,000. And the guy would have made a lot more than 40,000, by the way, if Apple would have followed through even more, but it didn't. So you need to build a good team around you if you want to do as well as you can. And I'm going to keep saying that, and people can keep sending in your nasty emails and tell me how all you need is yourself, and no one ever helped you in trading, and the only way to learn how to trade is to do it yourself. You can keep sending me in those emails, and I'm going to keep telling you what I observe on a desk, which is the people that work together have the better chance to succeed. Now, as Dr. Steenbarger says, I'm going to go take my meds, and I'll let you get back to what you're talking about.
Sounds good. So finishing up the trade review, reading the tape was essential for this. I noticed how reading the tape can allow you to fight for price, which ultimately sets up the whole trade with an incredible risk-reward opportunity. How much edge can be gained from trading this day one? I was able to pick up on a lot of the patterns, specifically how well is traded off of the levels, which gave me the confidence to execute aggressively day two. And finally, the importance of trading with the trend. Obviously, we had a very positive catalyst. And if you just stick with that bias, you're never going to make money. So I let the price action tell me what to do and was influenced by that. When everything aligns, I want to be exponentially bigger. I'm not at this step in my trading career yet, so I'm still consistently sizing until I prove edge. But for when I get there, how will I trade this bigger and better next time? That I will have a risk card for at the time. But I think getting the initial entry with bigger size, I wouldn't change any of the executions, to be honest. But I think that stop placement.
Yeah, I said this to the last in the last review I did with the trader, and I'd like to see you do more of this. I'd like for you to be able to recognize the things you did well in this trade.
Yep.
And I'd like for you to be able to recognize, and I don't think you did that you worked with two different sets of people and collaborated with them, and that led to you trading better. I think that's like a big part of it. Like you got good technology that helped you make more money. You talked to senior traders that helped set up this trade. And the reason why that's important is that is a very key component of what led to you doing well in this trade. You got to study why you did well, not just the trade.
Yep.
And so And I think you want to ask yourself, like, did you enjoy that as well? Like, do you enjoy going to talk to Dan
Yeah.
and working with him on technology? Did you enjoy talking to the senior guys, and really observing that? You gotta make note of why you're doing well in your trade reviews, and not just beat yourself over what you could have done better or what you didn't do better. There's a skill to that. It's kind of like, you're a high level player, and it would be like, I don't know volleyball that well, but I've said this before, which is, I'll use my son. All right, so my son throws really well. Okay, he's has the potential to be a really good pitcher. He isn't the fastest kid on the baseball field. If he tried to be a center fielder and play in college, like, that's not going to happen for him. All right, but if we help him recognize that, he throws the ball really well, he can be a pitcher, and we allow him to develop those unique special skills, then maybe one day he will be able to play at a high level. And it's the same thing with trading. You have to understand where your true talents and your true ability are, and what you're doing well is, and build on that.
Mm-hmm.
Does that make
it's
sense?
Exactly what you said in the Garrett Cole tweet the other day.
Yeah. I said, Garrett Cole. I think we may have said this in a former video too. Yeah. Garrett Cole can't run, can't hit, can't field, but can throw 100 miles an hour. He's not disappointed that he can't run, hit, and field at the major league levels. He's very happy making $40 million, married to his beautiful college sweetheart, who also apparently was a good softball player, because he built around that. All right, so you got to do that too.
Yeah, so I think reading the tape and seeing the turn is definitely one of those strengths that I've become better at. And then kind of getting into what we were just talking about, the process from day 1 to day 2. The picture on the right, this was my trade write-up after day 1. So I took a screenshot of the chart, and I wrote up basically how I want to execute this if I see this again. And what are the odds it happens the next day? And it actually paid off in less than 24 hours. But basically, I was stopped out on that second retest of 67.
So basically you did that. You could have just cut me off. It just was on the other page?
Yeah.
All right, good. So good job.
Kirk can edit that out.
Okay. No. We should keep it in.
Sounds good. So basically what I did after this trade, because this really bothered me, but I think the difference between just being bothered and going to do whatever.
We got it. So let's go through the scores. All right, stock selection. So we're going to grade you on 10 factors for your playbook trade. You are a senior intern, so you have to get 85 out of better, 85 total out of 100 or better. Stock selection, 9 out of 10. I thought that was a really good news catalyst, and actually even had a good technical catalyst with that. So met what we're looking for with stock selection. Big picture, 9 out of 10. I do think you wanted to think a little bit more about whether or not, since we were near highs, how much we might pull in from highs, or whether or not we're more likely to just go back through highs. You need to be thinking about that when you're near a high or a resistance area. Are we going to pull in 10%, 5%, 3%, 1%? So you want to be thinking through that. Trade strategy, I thought, was 10 out of 10. I thought you were very specific with your trade strategy. Intraday fundamentals, 9 out of 10. The one thing that I thought I would have liked for you to address there was the RVOL on day 2 was not that great. Yeah. Usually we want to trade something with an RVOL of 3 or greater. This was less than 2. I want you to be talking through a reason as to why. I guess your reason is the levels were so good. But I want RVOL to be higher. Technical analysis, 10 out of 10. I thought you did a good job pointing out longer term levels, resistance levels, and intraday levels. The confluence of that made for this to be a pretty clean trade. Reading the tape, that you did a good job on the turn, 10 out of 10. What I like about that is you just knew exactly what to look at on the tape. Like, that is what you look at. You look at the retracement and you look at the turn near the key technical level. That's how you usually reading the tape skills, and that's what you did there. Trade management, 10 out of 10. I thought you had a pretty clear plan for how you're going to get out of your trade, your reasons to exit in full. Thought you were very specific with that. I thought, the one thing I would say is I would have had a different stop in there.
Yep. That's good to note too, because that's been one of my problems is where am I really wrong in this trade?
Yeah, on your swing trade, it's got to be the real stop.
Yeah.
Where's your idea wrong?
Yep.
My idea is to short the stock. Where am I wrong?
Yeah.
Not wrong at 6 cents. All right, technology, 10 out of 10. Good job talking to Dan. Good job giving back. Review, 10 out of 10. I had you a little bit lower than that, but then all I had to do was wait for the next slide, so I apologize for that. Diligence, 10 out of 10 as well. Again, this is a very specific review. Do a good job of collaboration. This is a good combination of a technical and a news catalyst. It's a good job finding a clean stock. This was a good trade. This is solid. 97. All right. So that's pretty good. So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.